Top-down analysis has made my trading very simple. It helps me understand the direction of the overall markets, the location of where to place trades in the markets, and where to execute trades in the markets. And after trading and testing hundreds of different concepts and strategies, I can confidently say that top-down analysis is one, if not the most important concept that I've learned as a trader. And in today's video, I'll explain the exact steps on how to use top-down analysis, and then I'll show you live examples on the charts. Let's get into it. Okay, so in today's video, we're going to talk about top-down analysis and why top-down analysis is very, very important when it comes to your trading. And if you're able to understand top-down analysis and incorporate it into your own trading, it will dramatically change the way you trade. And I'm going to show you exactly why that is the case in today's video. And as you can see right here, this is my P&L statistics for the last 30 days for the month of January. And this was my personal biggest month of my trading career. As you can see, I made over $140,000. And majority of the big winners, as you can see, were primarily based off of what I'm about to talk about, which is top-down analysis and understanding the higher time frames. One thing I do want to mention is that it took me years in order to become a profitable trader. This did not happen overnight. I've lost plenty of trades and blown numerous accounts in order to get where I'm at today. So with that being said, let's get right into the video. And as I mentioned, the goal of today's video is to show you a complete system on how to identify high probability setups with continuation. You'll learn my top-down approach to trading that is repeatable and mechanical. Has this ever happened to you? Have you ever seen a super clear level of consolidation? Price is ranging in between key levels. We know that we're not supposed to trade inside of range, so we're very cautious. And we want to wait for the break below, or we want to wait for the break above for continuation to either the upside or the downside. And as you can see right here, we finally get that break underneath this key level of support. You can see we have this nice push towards the downside. We have weak candle closures. We have some displacement here as well. Now, all we're looking for is the retest for that continuation back towards the downside. So as you can see, we get the retest right here. We have a bunch of strong candle closes. We have weak price action right off our key retest level. And now we enter in short with a stop loss just to break above. And we look for our targets all the way back towards the downside. And what happens? As you can see, price immediately reverses and we end up taking a loss. And now we start questioning ourselves. What happened in this trade? We waited for the break outside this consolidation. Price came back up and towards our retest level. We waited for weak price action. We entered in the trade and it ultimately was a loss. You did everything right, but lost money. Now you're questioning yourself, you're questioning the system and strategy. Now you're very confused because if you did everything right, why did you end up losing money? And the one key thing that we're forgetting, which is very important, was that the daily chart was in a clear uptrend. As you can see, we're making higher highs, higher lows, higher highs, and we're continuing to push towards the upside. So we're trying to look for a short when the higher time frame was bullish. The key here was we were selling when we should indeed be looking to buy dips to go long towards the upside. And this is a mistake that ruins most traders. If we're to trade with the higher time frames in mind, if we're focused on the trend on the higher time frames, it would help us out a lot. And this will allow us to avoid making these simple mistakes by just understanding one thing. And what can we do in this case? What we can do is stop fighting against the trend. Now we have two charts pulled up. On the left-hand side, you can see we have the daily time frame. And as you can see, we're in a clear uptrend. Higher highs, higher lows, higher highs, and we're pushing towards upside compared to the lower time frames, which were consolidating, and now we're ultimately in a minor downtrend. So if the higher time frame is bullish and the lower time frames are bearish, we don't want to be fighting the trend. We want to be in time frame alignment. We want the lower time frames to also be bullish to give us more conviction and for us to trade with the trend instead of fighting against the trend. A good analogy is if we're swimming in a river. Is it easier to swim with the current or without the current? Of course, we want to be swimming with the current because it's going to be a lot easier when you're fighting against the current. And in this case, relating it back to the charts, you're fighting against the trend. So what is the solution that we have? The solution is that we need 3 time frames before placing a trade. And as you can see, I have a 3 chart layout. I'm going to show you guys what the layout looks a little bit later, but we have this 3 chart solution. We have a higher time frame, medium time frame, and we also have a lower time frame. This is also called multi-time frame analysis. I'm sure you guys have heard this before, and this is one of my favorite topics to touch up on is multi-time frame analysis / top-down analysis. And as you can see, it's broken down into 3 simple steps. Number 1 is the direction of the market. It's basically asking ourselves, are we moving higher or are we moving lower? What is the trend? Number 2, the location. Where are we placing trades from? We're essentially talking about the narrative. If we're going to go higher, where are we going to go higher from? If we're going to go lower, where are we going to go lower from? And the third, which is our execution. Where are we placing our trades from? Where is our entry? It's very important to understand that we have to go in order. We have to understand the higher time frames and then go into the location and then go on to the execution. We cannot go backwards. We can't start off on the execution and then work our way back to the location and then work our way back to the direction. Now we understand the direction, we understand the location and the execution. What are the timeframes and how can we split it up? And the timeframes that it can be broken down into is the higher timeframes, which is the direction, the medium timeframe, which is the location, and of course the lower timeframes, which is our execution. And right here, I have created us a cheat sheet to understand exactly what timeframes that we should be using corresponding to how we trade. So for example, if we're swing traders primarily, we're going to be on the higher time frames. So the daily chart is going to be the highest time frame. That is going to be where we're finding the direction of the overall markets. The location in this example is going to be the 1 hour time frame, and our entry is going to be on the 15-minute. This is great for swing trading if you like trading on the higher time frames and you want to capture a higher time frame trend. Day trading, it's going to be a little bit different. The higher time frame in this case is going to be that 4 hour. In this case, this is where we're finding the direction of the markets. The location is going to be that 15-minute time frame, or you can use the 1 hour time frame as well. And then our execution is going to be on the 5-minute chart. And if we're scalpers, we want to capture quick momentum moves in the markets. The 1 hour time frame is our direction, the 15-minute time frame is our location, and the 1-minute time frame can be our entry. So this is a cheat sheet right here. You can take a screenshot and use this as reference. As I mentioned, this is all dependent on what type of trader you are. Now let's go on to some examples on the charts to show you guys exactly how to use top-down analysis and how to use multi-time frame analysis in our trading. Okay, so now you can see I'm on TradingView, and what I have right here is my 3 chart solution. As you can see on the left hand side, what I have is the higher time frame. I'm currently on the 1 hour chart, and this is where I find the direction of the overall markets. Number 2, what I have right here is on the top right, and I have a 15-minute time frame, which this is used for determining the location. And then on the bottom right, what I have here is the 1-minute time frame, which is used for executions. So as I mentioned, this is a 3 chart layout. You can do this by going to the top right. If you click the layout section, you can see you can choose 1 chart, you can choose a 2 chart layout, a 3 chart layout. You can split this up into thirds if you like, having the direction, location in the middle, and the execution. You can customize this to your liking, and you can do this by using the basic and premium plan on TradingView. If you don't have any plans on TradingView, you can just use a 1 chart layout and have 3 layouts open, so you can have 1 chart strictly just for the daily time frame, and then you can flip down into the 15-minute time frame, and then you can have another layout for the 1-minute time frame. This is if you don't have the basic or the premium plan. Another option that you can do as well is if you have multiple monitors, you can have different layouts on different monitors, but if you only have 1 screen to go off of, then you can use the 3 chart layout that I mentioned. So now with this being said, let's go on to our first example. So as you can see right here, I'm on my first example, which is on AMD. Right now I'm on the 1 hour time frame. So this is to determine the direction of the overall markets. You can clearly see that we're in an uptrend. We're making higher highs, higher lows, higher highs, higher lows, and we're clearly pushing towards the upside. Number 2, now I'm on the 15-minute time frame. We can use this to determine the location and where we want to be taking trades. If we zoom in here, let's go on to the main chart. We're now on the 15-minute time frame. What we can do is mark out key levels. So the key levels that I'm going to have marked out on AMD, of course, is going to be that previous day highs. We can drag it down so it touches the high that we had from a few days ago. Other levels that we can have marked out here is going to be that previous day lows, and we can drag this up here as well. So essentially what we have coming to market open, we have the previous day highs and that previous day lows. Where we want to be taking trades from is of course this high and this low. If we can break above our previous day highs, retest, we can be looking for continuation towards the upside. If we push higher, reject off this level, we could be looking for this continuation back towards the downside. So let's go back now on to that 3-chart solution, and let's play the tape coming into market open. You can see right here that my levels are on every single chart. And this is a neat feature on TradingView. If you go into the left-hand side and you click new drawings sync globally, that means on every single chart and every single layout that you have, it's going to sync. If you have this checked off, if I draw brand new levels, it's not going to sync. So make sure you have this feature turned on so you'll be able to have these levels on all your charts. So now let's play out the tape coming into market open. So as you can see right here on AMD, right off the bat, we're pushing towards the upside. We're now above our previous day highs. You can see on the hourly chart here as well. What we're really waiting for is, of course, strong buyers to step in here off our previous day highs. If we can step in off our previous day highs, then we could be looking for continuation. So as you can see right here, no buyers are stepping in, so there's no entry. What we're going to be waiting for is the reclaim back above. We need a strong reclaim, and we really want the higher time frames to close above this key level here as well if we want to see any sort of continuation higher. So as you can see right here on AMD, we had that rejection off our previous day highs. Now we're reclaiming back above our previous day highs key level. This is exactly where we can go look long. If you want another time frame here as well, you can see the 15 minutes giving us a good perspective. If you look on the 5-minute chart, we're actually closing above our previous day highs here as well. So this is a good indication that price does want to indeed continue back towards the upside. So this is exactly where I personally went in long here on AMD with a stop loss just a break below. And where am I looking to target in this case? Number one, I can have some targets just based off of our internal level. If we go back onto the hourly chart, we can go back and look left here on the higher time frames to look for higher time frame key levels here as well. So the next level above this 240, of course, is going to be now our 248. That can be a key level that we can look to target. Another possible level we can look to target is this high right here, which is your 245. So if we go back on now the 1-minute chart, these are the exact levels we can look to target for AMD. As I mentioned, we have our direction, which is on the higher time frames. We have the location and we have our entry. And once we get that entry, we can look to target our higher time frame objectives. Now let's play out the tape to see exactly what this looks like. And as you can see right there on AMD, we end up having that perfect break towards the upside. The 1-hour time frame closed very much bullish. We had continuation. The 15-minute time frame, we had that nice break and retest. The 1-minute time frame, we had that nice reclaim here as well. And this is the exact trade that I took here on AMD to target our higher time frame key levels. And this was a great example of using all 3 time frames in combination with one another. So it is very important to mention that you need all 3 time frames to understand the overall context of the market. You need the direction, you need the location, and of course you need the execution, which is the entry time frame. So that being said, now let's go on to the next example that I have for us today. So as you can see, we're on my next example here and we're on MU, and we have the exact same 3-chart layout here. Once again, on the left hand side, what I have here is the direction, which is on the 1-hour time frame. If you go back and check out the time frames, I am personally a scalper, so I like trading quick momentum moves in the market. So my higher time frame is going to be on the 1-hour chart. As you can see here, it's clearly in an uptrend, right? MU has been very, very bullish on the lower time frames and on the higher time frames. So on the hourly chart, you can see we're making higher highs, higher lows, higher highs, higher lows, and we're having this really strong push towards the upside. So now with this being said, we understand the direction, which is bullish. Now we can go on to the 15-minute time frame and we can mark out key levels. The key levels in this case, of course, are going to be that previous day high, and we can mark out that previous day lows. This is the location. If we want to go long in the markets, we want to see the break above, continuation for this push towards the upside. If we reject off this level, then we're going to come right back towards the downside. So long position, since the direction is bullish, we want to see longs above our 398. Now with this being said, let's go on to the lower time frame, which is our entry, to see if we could be looking for longs towards the upside. So as you can see here on MU, right off the bat, we're rejecting off our 398. Couple rejections off this key level. What we're going to be doing, as I mentioned, is waiting for the break above, retest for a continuation towards the upside. So as you can see right here on Micron, we're finally having that candle close above our previous day highs. This next previous candle, strong candle close. Since the higher time frame is bullish, right? The direction is very bullish here as well. We're looking for this reclaim setup with an entry as this candle is forming, stops just a break below. And now we're looking to target, right, our higher time frame key levels. So in this case, if we go back onto this 1 hour chart, we can target this key high. That can be one of our main targets. And of course, since we're at all-time highs, we can be looking for continuation above that key level here as well. But now let's play out the tape to see exactly what this will look like. And as you can see right there on MU, we end up having that super solid push right up and towards our key targets. In this case, MU was at all-time highs. So we're targeting key psychological levels and we're looking for, of course, continuation towards the upside and beyond. But this was another great example of using this 3-step framework, using the 3 different time frames in combination with one another to, of course, have those high probability setups. And with that being said, I hope you guys did enjoy this video. I hope you guys found some value. If you did, appreciate if you guys drop a like and sub. And with that being said, I'll see you guys next week for a brand new video. Peace.